Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to another edition of Java with Jared. Hope you guys are doing fantastic. Well, even if you're not doing fantastic, interest rates are doing pretty fantastic this week. They finished the week better than where they ended the week last week. And last week we saw the unemployment report come out, and that showed a little bit weaker a report overall. The numbers weren't too terribly bad, but when you really dig into them and see what's happening, it wasn't that great for the economy, and so interest rates began to improve, and that followed through here this week, and also caused the stock market to suffer some losses, which translated into better interest rates this week, and I'll get to that in a second. We had a pretty weak or light economic data week. The only real big number that came out was the Producer Price Index, and that showed that it increased higher than what was expected. Now, the Producer Price Index measures inflation at the producer level. It's not necessarily what's going on with the consumer. It's only the producer. And that showed an increase of 0.5%. Expectations were only for an increase of 0.1%. And the core rate, which strips out the volatile food and energy component of that, that showed an increase of 0.6%. So that indicated that maybe some inflation, which the Federal Reserve is trying to get started here in the economy, might be starting to happen. But it's only one number, and we'll see if this translates to the Consumer Price Index, where the actual consumer is really feeling the effects of inflation. But it does look like there's just maybe a little bit more inflation than what was previously estimated. But again, it's just one number, just 1 month, and we'll see if this actually becomes a trend. But the real big news was actually the stock market, equities. Now, money flew from stocks and bonds yesterday into mortgage-backed securities because the stock market got hammered. We saw the NASDAQ, that actually had a one-day decline of about 3%. The Dow Jones Industrial Average decreased 2%, and the S&P 500 decreased 1.6%. So it was a big drop just for one day, and it has investors worried that maybe we're now finally going to see the correction in the stock market. And again, money flew from stocks and bonds into mortgage-backed securities, so interest rates improved. So we saw a follow-through to what happened with the employment report last Friday into this week. So rates continue to be really great, and really there's no, I think, concern that we're going to see interest rates really rise into the summer months, into this home buying season. So interest rates are great. So get out there and start continue to tell your clients that now is still a wonderful time to buy a home. Yes, inventory is low, but be patient and get in there, be aggressive, and look for a house. I'll let you know if we still continue to see the stock market suffer, interest rates will improve. And as of right now, the stock market hasn't received any footing. So if we do still see some of this correction, we could see that interest rates do improve. And we'll let you know what happens next week. It'll be an important week to see if we still see the stock market tumble or if it receives some stability there. If you have any questions, please feel free to always give us a call. I'm having a great day. Hope you are too. If you're working this weekend, so are we. And we'll talk to you soon. Thanks for joining me with Java with Jared. Bye-bye.